It was a widely mixed start to the week. Soybean and meal futures were pulling grains to the upside, but soft red winter wheat futures anchored the markets until sellers took control of corn. Live cattle futures shrugged off initial pressure to move to the upside, and lean hog futures seemed to be the falling knife in the ag markets.
Live from the cast iron grip of summertime via Farm Journal Studios, this is AgriTalk. This afternoon, it's a conversation with Darren Frye from Water Street Solutions. Directly following the news, Jack Scoville from the Price Futures Group. I'm handsome newsman Davis Michelson, and now the host of AgriTalk, Chip Flory.
All right, Davis. Hey, thank you so much. Welcome to AgriTalk. I am Chip. That is Davis.
I didn't see Cary Artac on our list. Is he out today?
No, we've got Cary.
Oh, we do have Cary. All right, so
Yes.
apologies, everyone. And in the final segment, Cary Artac from ArtacAdvisory.com.
Yeah,
Now back to
very
you.
good. Very good. Of course.
Thank you, Joe. Thank you.
A little Back to the Future there. I love
A
it.
little bit.
Love it. All right. Darren Frye. Darren Frye is on the show today. We're going to talk momentum. We are going to talk crop conditions. We are going to talk crop scouting. We are going to talk what does the market have factored in ahead of Friday's acreage and Friday's quarterly grain stocks reports. Okay. So, in other words, we got a lot of ground to cover on a day like today, and as long as we've got Darren here, I'm going to put him to good use, and we're going to dig into all those topics as best we possibly can. Beautiful.
Awesome.
It's beautiful. It's a little warm. It's a little sticky, but for the most part, hey, we got some sunshine, 87 degrees. What does it feel like? Feel like it's 92.
Okay.
You get west of here, and it's not nearly as pleasant. If we're calling this pleasant, it's not nearly as pleasant over there.
No, I'm going to just go ahead and say it. It is unpleasant here. I'm not able to find. Wait a second. Oh, humidity is making it feel like it's 107 degrees. We're only 99 degrees right now, but we're headed for a high of 101.
Are you serious?
Yeah, seriously, here in KC right now, it's, we just flipped to 100. 100 degrees in Kansas City, everyone.
Oh, my gosh. I'm sorry.
It's stifling out there, bro. I'm not going out there. Like, the dog doesn't even want to go out. Yeah.
I'm thinking of mowing lawn this afternoon.
Well, enjoy it. Think of the rest of us who,
I will.
For safety reasons, just can't even go out.
Yeah, I hear you,
Rough.
man. All right. Hey, let's get to the news. What do you got?
Yes, let's do. July soft red winter wheat futures were lower for a sixth consecutive session. Front month SRW opened near session highs and posted a close just below the midpoint of today's range. The downtrend in hard red winter wheat futures continued with July futures spiking support at 575 before recovering to close in the upper half of the day's trade. Export inspections of wheat in the weekend of June 20 totaled nearly 343,000 metric tons, and that was at the low end of trade expectations. Traders continue to evaluate Russian crop potential. Argus this weekend cut its forecast to 79.5 million metric tons, down about 12 million tons from last year. December HRW wheat futures were 1 3/4 lower at 601 1/2. December soft red wheat down 5.5 cents to 594 1/4. At last report, September spring wheat down 3 1/2 at 613 3/4. Chip.
Yeah, very good. Market's trying to figure out which direction it needs to go right now, but the momentum is clearly to the downside. I think SRW has closed lower in 16 of the last 18 sessions.
Oof.
Oh, it's terrible.
Well, corn export inspections weekend of June 20 totaled 1.12 million metric tons, and that was in line with trade expectations. December corn futures dove through support at 450 and spiked to a new contract low before recovering to post a high-range close back above the February 26 low of 446. Traders are sorting out crop prospects, but sellers remain in control of the market as traders prepare for Friday's acreage and grain stocks reports. Traders also said the potential for rain in some of the dry southern Corn Belt areas weighed on prices today. September corn futures a penny lower on the day at 439 1/2. December corn down 1 1/2 cents to 451 3/4. March corn futures closed at 463 1/4, down 3/4 of 1 cent. Chip.
Yeah, the guys up in Minnesota, southern or northern Iowa, they're praying for a couple of dry days. We're getting one. But we've got some rain back in the forecast for tomorrow, and the guys down in the southern production areas are saying, bring it on. Send it down this way. It's quite the mixed bag we've got going.
Soybean export inspections weekend of June 20 totaled just over 342,000 metric tons, in line with trade expectations. USDA this morning also announced the sale of 228,000 metric tons of soybean meal for delivery to the Philippines in the new crop marketing year. That helped support bean meal and encouraged long meal short oil spreading. Soybeans today decided to follow meal to the upside. November beans opened slightly higher, fell back to spike to a new contract low, then recovered to close above Friday's high. That's an upside key reversal for new crop beans. August soybeans 13 and 1/2 cents higher at 11.60 and a half. Sept up 11 cents, 11.30 and 1/2. November beans closed at 11.30 and 1/2, up 10 and 1/2 cents there. The Sept Nov spread is at 0, Chip?
Yeah, you know what? I'm not. 11.30 and a half. Yes.
Wow. Looky there.
Yep, they're matched up. August soybean meal today up 9.60. August soybean oil down 41 points.
Well, December cotton today was 118 points higher at 73.39. On your livestock quickly, August fat cattle opened lower on pressure from Friday's cattle on feed report, then rallied on a steady boxed beef market. And ideas the cash cattle market will be higher this week. August fats $1.67 and a half higher, 184.82 and a half, and August feeders up 52 and a half to 258.90. July lean hogs today $2.10 lower, 89.95. Chip Flory.
All right, thank you very much, Davis. Let's bring in Jack Scoville, Price Futures Group. How you doing, Jack?
Doing great. How about you?
Well, not too bad. Good grief. The grains had something for everybody today. Big gains in beans and meal, lower in the wheat and corn. What'd you make of it?
Well, I think it has to do mostly with Brazil because coffee was also higher, sugar I believe was higher, so it had to do something with Brazil. And the only thing I can think of that's going on down there that would cause this sort of thing is this tax deal. Yeah. So I think that was the primary motivator. But I also think we have to pay attention to the weather that's going on here, not only in the Midwest but in the Southeast. Talking to one of my producers down in North Carolina today, he said, his dryland crops are burning up, especially the corn. And that's not been reflected in the crop condition ratings, nor has all the rain north of Chicago, in the Minnesota, southern Wisconsin, northern Iowa, all these places, maybe the Dakotas and Nebraska, way too wet. And the crops just can't be 75% good to excellent.
Well, at some point we might figure all of that out, but I don't know how low corn's got to go before the market figures that out, Jack.
No, I don't either. I'm just, in fact, I told my producer down in North Carolina, I that same thing. I said, it could be tonight with the new crop condition ratings coming out. It could be in a couple of weeks. We don't know, and until then, the market's probably going to drift lower.
All right, Jack. Yep, I think we're kind of in a waiting game on these grain markets right now, and bulls are waiting for the markets to get a better handle on crop conditions. Thanks, buddy. We'll talk to you later. Jack Scoville, Price Futures Group. We've got Darren Frye, Water Street Solutions, up next here on AgriTalk.
The truth is hard to come by these days, unless you listen to AgriTalk.
All right, you got me interested here, Davis. So I went and started looking at the crop tour locations. And,
it's coming up the third full week of August. Is that Monday the 19th we kick off? Do I have that
I believe
date
it
correct?
is.
I believe so.
Yep.
Third full week of August.
Exactly. Sioux Falls, South Dakota is where we'll gather over on the Western Belt. Right now feels like 98 degrees.
All right.
Grand Island, Nebraska feels like 104 degrees.
Wow.
Then back to Nebraska City, where right now it feels like 108.
There you go.
Getting there now. And at the top of Spencer, Iowa, it says flood warning.
Mm-hmm.
These conditions are expected to last until 2:45 p.m. Tuesday, June 25th. And we've got a feels like of 97 degrees. How would you like to be dealing with all that water and sandbagging and cleaning and everything that comes along with all the flooding that they had in Spencer in feels like conditions of 97 degrees?
Well, here's the deal. I'll come hang out, and when you get tired and frustrated and discouraged from filling those sandbags, you come on over, have a hug, and then get back to work. How'd that be? I'll provide that service.
I don't know. I think I'd rather just have you fill the sandbags.
Well, ultimately, yes, in a perfect world, but all I can really offer in those situations are hugs. But I'm happy to do it. Happy to do it. It's my gift.
Fantastic. Well, thank you for doing what you can do.
We all help out in whatever way we can.
Yeah, I guess. All right. Thank you so much, Davis.
Sure.
Yep. Let's bring him in. Darren Frye, Water Street Solutions. How you doing, Darren?
I'm doing great. How are you, Chip?
Okay. Yeah,
All right.
I'm trying to figure out what the heck's going on, man, because I see a lot of issues ranging from too dang dry to way too much water. And it feels to me like this corn market we made new low in D's corn today, Darren. What in the world?
Yeah, we sure did. Well, it's all momentum traders. It's the funds, it's the algos, it is the CTAs that use momentum, and the trend is down, and they just push it until it is stretched, can't go anymore, and then they take profits, and when that line crosses that line, they start buying, and they move it right back up again. So what wheat has done has been amazing, but that's nothing but the algo traders. I mean, things have turned a little bit more favorable for a bigger supply, like in Russia. Our yields are pretty good here. But I don't know if you can justify $1.50 down from the highs with the type of strength we've seen. And I think a lot of this is just momentum traders, and we got to change the way we think of markets, look at markets, and react to markets. And so I think that's what a lot of this trade's all about.
Okay. So if we've got to change the way that we think about markets, what do we need to think about?
Momentum.
That's it.
Well, you know, a lot of guys that grew up on the commercial side and now trade or help farmers, and they understand spreads, they understand basis, they understand what's going on with SIF values. We're seeing some good things here in old crop beans. You're seeing that spread move out to, 45, 50 cents. And yet we have a carryout that the government says is 350 in soybeans. So is it 350? I mean, that's what I'm trading, but the spread acts like it's either a lot more demand than what we understand or a little bit smaller supply because of how these spreads are acting. But what has happened to the flat price when that spread's gotten stronger from 10, 15 cents all the way up to 50 today? Beans have gone down a bunch. And so nothing trades like it used to. So guys that get in there and say, you can buy this market, look at these spreads strengthening, they just get clobbered. And so it doesn't seem like fundamentals matter until the position of the flow of money changes and the algos start going that way. Then fundamentals will matter, and it'll shove it too far that way. And so I think we have to just watch momentum and not think about the things that have been driving the markets for many, many years, but don't seem to have the effect today that they used to have. And the cash markets are one of them. The other thing is the weather. I don't think any of us buy in anymore to you can hurt this crop. And so you got these people trading billions of dollars. If you can't hurt the crop, why not be short? And they've done a good job pummeling this thing right in the ground.
Okay.
That's a lot, right?
Yeah, it is. It is. But how is an old fundamentalist like me supposed to figure out how to market these crops then?
That's what's got to change. I mean, this is all technically driven, and the CME has been moving toward this for a long time, and we've just now gotten to the point where things just don't make sense. You look at the cocoa market earlier. Did the cocoa market need to do what the cocoa market did? Well, it didn't, and so I guess it needed to do it, but did it really? And you see these extremes There's a lot of negative news economically out here, but look at the stock market basically making new highs every week. And so that's kind of made people take a second look. And so when you think about the flow of money and you think about how they can push things around, and position limits have been raised. We have smaller markets than the stock market, the bond market, or currency markets. And with those position limits, we just discovered new ways to be an asset class. And I think that's what we become as an asset class. They buy it until it doesn't go up anymore. They sell it. It's a way to move in and out. And it's not anything to do with fundamentals at that current time that you're trading it. So eventually fundamentals matter, but do they matter today? Probably not.
That's where I wanted to go, is eventually the markets have to reflect the fundamentals of the balance sheets. It's got to come around to that at some point, right?
I agree with that. And the question is, when does that really come around? You take the flooding up in Minnesota, Iowa, parts of the Dakotas, Nebraska, Wisconsin. Rain makes grain. So you got a lot of people, if they don't know anything about agronomics, they've never been in a cornfield, which a lot of these large traders haven't been if they trade out of New York or wherever and they have funds and they're managing money. But rain makes grain, and you're not going to hurt that crop just because maybe 10 or 12% of all the acres in the country are getting way too much rain. But we know there's going to be problems there. But when will those be traded? When the combine runs through them and we find out what the yield was. And that's how the derecho was, 4 or so years ago. I think that was 2020 when we had the derecho, and nobody traded that until after. It's like, oh my golly, that really did get rid of a lot of yield. And of course, a number of things happened that year to take corn prices way higher, but that was one of them. But it didn't get traded till way later, even though you could see there's a problem out here with the straight line wind that knocked down a quarter of Iowa. And so I think we'll trade it, but it'll be later.
Okay. I'm not saying that this is 1993. I'm not saying it, but it's kind of got the feel of it as far as how the markets are looking at the conditions in the areas that have seen too much rain. As you said, the attitude in 1993 until November was that rain makes grain. And then it was the reality of scale tickets at that time that proved that rain doesn't necessarily make grain when it's in excess like that. And I get it. For this to be 1993, it's going to have to rain like it's been raining from now until the 1st of September. I don't think, and I certainly hope, that is not in the forecast, but there's a lot of differences between now and 1993, except for the way that the markets seem to be reacting to some of the crop concerns that I think a lot of people have got. Is that fair to say?
Yeah, I think it is fair to say 1993, this pattern is nothing like 1993. Right. It isn't. It's a part of the Corn Belt that is rich in production. I mean, you take the northern 2 or 3 tiers of counties in Iowa, you take southern quarter of Minnesota, part of that western part of Wisconsin, the eastern part of the Dakotas, Red River Valley. I mean, that is some really nice soils, really nice productive areas. But, the 93 thing was Iowa and Illinois. And, of course, it didn't really start to really rain hard until the end of June all the way through July. I mean, we were a little bit wet, but it really started now and went through July. And I do think that area that's been wet, Minnesota, Iowa, the area we've been talking about, it's going to stay wet. I think if this ridge sets up again, you're going to see those cluster storms. They got real problems up there, and my heart goes out to them because property's being lost and crops are being lost, and it's emotional for those folks, very emotional, and it's a very difficult situation. But I don't think that pattern is going to change much, and I just don't think it's going to be that wet everywhere. And that's what it would take to turn this into 93 is what they've had in Minnesota. It comes further south, further east, and gets into Illinois and even Indiana. I just don't see that happening. But we got a good set of problems right now for this crop year.
Okay. So when does the market start to figure that out? I want to talk about that. Plus, we need to get ready. You mentioned it on the beans. The basis is acting like Either demand is better or the supply is smaller. Are we going to find that out in Friday's quarterly grain stocks report? We'll talk to Darren about that next.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were 1 3/4 cents lower at 601 1/2. December soft red wheat down 5 1/2 cents to 594 1/4. And hey, looky there, September spring wheat closed 4 1/2 cents lower, 612 3/4. September corn futures were a penny lower at 439 1/2. December corn down 1 1/2 cents to 451 3/4. August soybeans 13 1/2 cents higher on the day, 1160 1/2. November beans closed at 1130 1/2. That's up 10 1/2 cents. December cotton today 118 points higher, 73.39. On your livestocks, August fat cattle today $1.67 1/2 higher at 184.82 1/2. August feeders up 52 1/2 cents to 258.90. June lean hogs today, $2.10 lower at 89.95. Get more at tryprofarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Do you suffer from talking on the radio phobia? No problem. Send us a tweet at #AgriTalk.
Welcome back to AgriTalk. I'm your host, Chip. Glad that you are with us. We are in the middle of a conversation with Darren Frye from Water Street Solutions, and I feel a little bit, Darren, like I might have hijacked the conversation in the first part. Obviously, if I'm looking at something that I think could potentially change the momentum of the markets right now, I'm looking at those at the crop conditions and the crop potential in some areas that are dealing with stress and drowned outs and stuff like that right now. But is that it? Is it crop conditions that could change the momentum, or is there something else?
Well, I think crop conditions would help, but, a lot of people don't think those are very accurate because we know that's not really done by going out and standing on top of the crop and analyzing. It's more of a visual inspection, maybe even from driving by. And so, are those accurate? But obviously, if they go up, that is bearish. If they go down, that's somewhat supportive. So that would help. But I think the biggest thing will be when we get into actually going out and looking at the fields in August, September, October, when the USDA goes out. But before we ever get to that, this Friday's report is going to be a big deal, because I think even though we're looking for a little bit more on the acreage side, I think a lot of traders don't believe that. I think they think there's more corn out here than 300,000 or 200,000 more acres than the March number. And so, hey, if we find out there's less acres, if we find out the quarterly stocks are down, even though they're going to be way bigger than last year, if they're down from these trade estimates, that could create a spark to just make the funds a little uncomfortable, which would induce short covering. And so I think that is a big deal if we see something supportive on Friday.
Man, did it surprise you that the funds went from short, call it 60 days ago, went from short to not quite flat, but much less short? They rolled out of a lot of those short positions. Did it surprise you that they just rebuilt the shorts as quickly as they did?
It was surprising. I was surprised they got out as well as they did, meaning there was a lot of farmers selling that they're buying. And so they got out fairly easily. And then I thought, okay, now let's see if they want to go long as we enter summer.
Yeah.
But nope. They they rebuilt a short position, not quite as large,
right,
but pretty large. And I think we're going to find out that they've done a lot of selling, and I think they did more selling on Thursday and Friday. So we get 2 COT reports this week, one today and one Friday. So we'll see what happens, but they're pretty short, I think.
Yeah. Okay. You were talking about the cash soybean market earlier, Darren. What are you seeing, and what do you think the messages are?
Well, I mean, if you look at the spreads and you look at like St. Louis basis, they're bid down there at 35 over on beans. That's firmed up 6-8 cents over the last week. Spreads have firmed up. It's sending a message to me that we either have more demand or less supply. Something's not quite right, and we should get some answers either in this third quarter stocks report or on the fourth quarter stocks report in September when we find out if the yield was actually right from last year. But the cash market seems awful firm. And we know there's some issues around the rest of the world in certain areas with weather, but certainly not a soybean issue in Brazil. I think, they had a big crop again, but we've seen premiums rise down there. And maybe we haven't fully accounted for the flooding in Rio Grande do Sul. I don't know, but something might be missed down there as well, because we're seeing some interest here and certainly driving our bean prices on the spread level higher.
So are you seeing anything in the cash market, whether it be corn or soybeans, that are telling us that they need to work on the crop sizes from 2023?
Well, talking to commercials, you wouldn't get that idea, but it's got to either be better demand than what we penciled in or a little bit lesser supply, like, a smaller crop. It can't be anything other than that. And I guess it could be tighter hands, farmers not willing to sell till we get a rally, and then you see the floodgates open. But I think farmers have sold a lot of their beans. I don't think there's a lot of beans left in the farmers' hands. And I think the corn, the market got a lot of that when we rolled into the March and May first notice day. I think a lot of these basis contracts, a lot of old crop corn got sold. That's why the funds came out of their short position so easy. So I just don't know how much corn is left in the farmers' hands, but that would be the third reason. Maybe the farmers aren't willing to sell at these prices. We got to see it higher before they let go of it.
Okay. You mentioned that the attitude going into the acreage report is that we're going to find some more acres. So USDA in the March prospective plantings report showed us 90 million acres of corn plantings. What are your thoughts there?
Well, I personally don't think we're going to see a lot more corn acres. Okay. In fact, I think we could see a little smaller. And talking with people that have gotten 75% of their book reported on acreage reporting for crop insurance, I'm not hearing that corn acres were up. They were steady on guys that rotate. They were down a little bit for guys that usually plant more corn over beans, so they back those off. I'm kind of thinking the acres maybe were low in March, but after the spring we had and some of the problems we had, especially in the Northwest, cool, wet situation, a lot of the country, maybe we backed off some of those acres we would have added. So I'm kind of thinking neutral or a little bit less. I just think the whisper trade out here from traders is they're expecting more corn acres. And if we got a neutral number here or slightly less, I think that'd be pretty friendly for corn, because I don't think in the minds of the big fund traders, they're thinking we got the same acres. I think they think we have 1 to 2 million more.
Okay. 86.5 is what we got on soybeans in the prospective plantings report. Thoughts there?
I think those go up a little bit. I would think that, I don't know how much PP we got. I'm sure it's up a little bit, but I think a lot of people, because of the lower base price, PP didn't make a lot of sense. So I think people either tried to get the corn in or they maybe switched to beans if they didn't have FERT on. And maybe those bean acres go up a little bit would be my guess.
Okay.
500,000, 700,000. I mean, something like that I could see.
Right. Okay. What is the situation with the Brazilian taxes? Jack Scoville from Price Futures mentioned it again at the start of the show. How big of a deal? Yeah, how big of a deal is it?
Well, I mean, I don't know if they're going to go through or not. I've read a lot of different things, conflicting things, but if they do go through, I think it's a big deal because it will help our exports. But I don't know. I didn't see anything out on the news wires today about it, but he is right. I mean, the sauce were up, like coffee and sugar and those products that come from down there. Cotton was up a bunch too, and old crop. I think that has more to do with our tight balance sheet here than down there. But, it is something that makes you wonder, and obviously it would be supportive for our soybeans, corn, obviously anything, ethanol, anything that would compete with Brazil.
Yeah. Speaking of cotton, we were doing the July market for quite some time, and I went straight past the October and out to the D's, the new crop contract on the price quotes that we give here on the show. Darren, I have no idea what to make of cotton. Have you got some thoughts on it?
Well, there's a lot of things that would tell you if the economic situation turns more sour here in the U.S., like after the election, it's hard to be long cotton because it's very sensitive to the overall economy. But cotton has come down a long way. I think you've gotten the funds really good and short there too. It looks like it wants to make a bottom. I don't know if it has. You don't have enough confirming price action. But I wouldn't want to be short down here, but that doesn't mean it couldn't go lower, right? It could go lower. Right. But, we're going to have an active hurricane season. And I'm not predicting there's going to be 25 hurricanes or 18 hurricanes or anything. But you listen to these weather forecasters, active hurricane season ahead. And, one of the things that's very dangerous for a cotton crop is hurricanes either into the Gulf or up the eastern seaboard, where you got the bowls open and they're really susceptible and you just get a deluge of rain on them, right? And it just ruins the cotton crop. And so I'm not sure why the cotton fundamentally could rise right now. I don't think it's because China wants to buy our cotton, but I do think inventories are a little tight. And we maybe won't have the crop or even the acres that we thought we were going to have when it's all said and done. So maybe we've just gotten a little bit too oversold here and we need to firm up a little bit.
Okay. Very good. Very good. Friday's cattle on feed report. Anything really catch your attention there? I mean, the placements were stronger than expected. That's for sure.
Yeah, they were 6% above. And, I don't know, those placements, they're all over the place. And so I don't know if the trade's just gotten used to being surprised and not surprised about it. I think the biggest thing was they were 1% higher on feed. And I thought that was a little bearish. I mean, markings were a little bit helpful, but if you look at it, I'm looking up in the cattle. I think we got too tight of supplies for the type of demand we still have. And, they acted really good today. They really closed well, given how people were expecting them to trade. And that's always a good sign when you go up like that after, a bearish or semi-bearish report. Yeah,
no doubt. I thought it was a good day for live cattle. I mean, the back months are lower in both the live and the feeders, but boy, the way that the nearbys performed, I thought it was really encouraging. And then there's hogs, Darren. Good grief.
Yeah, the hog market is just, it's like getting pummeled all the time. Here a few days ago, I suggest that we are into resistance and we probably have another leg down. And I think we'll have another leg up and another down. I don't think we're done going down, but we're in these up-down sequences. But they have more to go. And, while we've seen some culling of the hog herd, the producer is just too efficient. I mean, we're outproducing even what we're culling. And so that's the problem. We still don't have few enough numbers here to really get a bull market going and establish a bottom.
Darren, these conversations are great, man. Good stuff. Thank you so much for making time.
Thanks for having me on, Jeff. Appreciate it.
You bet. Darren Frye, Water Street Solutions. Really good. We got Cary Artac, Artac Advisory, coming up next.
Knowledge is power. We're here to charge your batteries. AgriTalk.
Davis, just wait.
All right.
Okay? Just wait.
I didn't say anything.
Well, that's the message that I heard. Okay?
Okay.
The message was we're just going to have to wait for these markets to figure it out. I hear what Big Apple Joe's doing there. He's trying to get me to debate the whatever the world the next 30 years is by turning the music up. I'm not going to do it. I'm not going to be
trying to egg you on. Don't play into his hand.
I thought the wait message was for me, like wait to fade that out.
Yeah, see, and I thought the wait message was for me, like wait before you say something. I have a point to make.
No, the wait is we've just got to wait until the markets figure this out.
No, the wait is take a load off, Annie. That's the wait, right?
That's the wait. I think you're right.
Let's get on the same page here and proceed.
I'm sorry. You know what? I think I'm going to have to work on that.
Is that like the same way like a wino eating a grape has to wait
I don't.
Until
Man, that's going about it the hard way.
The juice of it is fermented into something he can imbibe with.
Wow, that's that. I mean, that's
a lot to think about.
It's that's kind of the. I'm not sure what to say.
Uh-huh.
Yeah. Okay.
Cary Artac from ArtacAdvisory.com.
Thank
You could throw that in.
Hey,
Let's
Davis.
bring him in.
Anytime
How you
here.
doing, Cary?
I'm doing pretty good, Chip. How about you?
We're doing okay, man. No doubt. No doubt.
Sounds
Don't
like it.
forget, if you would like to get a free trial of Cary's daily service, go to artacadvisory.com, ARTAC advisory.com, and get signed up. You starting us off with July corn?
That's right, I am.
All right, buddy.
So let me jump into it. Yeah. Well, I sound like a broken record, but if you listen closely, this number is dropping a couple of cents every week. What was once in the low 470s is now the upper 450s, 457 and a quarter, a 1-year channel top that the lead contract, presently July, has tested. Actually, well, it has been a July contract testing since early May. We've tested it about a half a dozen times, and last week was sort of the big sell-off week early in the week, and we sold off, and we actually got down to 425 even today, which is the February low for the July contract. Now, the February low for the broader market on that weekly chart, when March 24 was the lead contract, is 404 and a quarter. And I've been talking about how that may be the ultimate target here as we move into later summer. If we close below 422 and a quarter, say this week, and actually got a nice bounce off that 425 low, that low area. Yeah. So I don't know if we're going to revisit that at all this week, but if we do close below 422 and a quarter, we could see July fall to 404 and a quarter over the next couple of weeks. We're entering the rollover now, so we will be rolling to September or December. I'm not sure just yet. The corn market sometimes rolls all the way out to December from July. We'll see how that plays out. But bottom line, 457 and a quarter is the level we need to close above at the end of a week to set off, well, really, number one, to indicate, I think, a good summer low. July then should rally at about 482 even within 2 or 3 weeks. But the broader market, the back contracts, as we spill into, the winter and spring of next year, we could make our way all the way up to 568 half if we can get up and over 457 and a quarter. But until then, this is just one continuous, vicious bear trend that remains intact by almost all measures below 457 and a quarter. On to November soybeans. November set off a meaningful sell signal a couple of weeks ago below a channel bottom that's now well above the market at 1165 even. We closed 1130 half today. As I mentioned in last week's show, I am anticipating the lower 1070s as a 1 to 2 month objective. But November beans also put out a key reversal low today. They broke to 1111 and change, and then they closed above Friday's high. So there's an early indication we may see some degree of recovery. Whether we get up to 1165 even or not is another question altogether over the next week or two. 1165 able to contain buying through July, and below which 1072 even remains a 1 to 2 month target. If we can close above 1165 even, and that is a moving number, rising channel bottom over the next few weeks, 1225 even becomes the next 1 to 2 month target. So we need to get above 1165 even, 1225 even, then likely within a month or two, where the November contract could actually top out into expiration. But until then, selling pressures can continue to build into July, that 1072 even in reach over the next month or two, possibly sooner, where November can bottom out into expiration and the broader soybean market perhaps through the rest of the year. And finally, August live cattle. I also mentioned this in last week's show. We have rising channel support. We tested a couple of times about 2 weeks ago, this week at 178 even. Having tested that channel bottom, the channel top at 188.15 is likely over the next month or so, and probably sooner than that. It could be actually over the next week or two. 188.15, meaningful resistance for the August contract, can contain buying into its expiration, and we can fall away from there into August expiration. But if we can get up and over 188.15 over the next week or two, and recent buying does suggest that as a possibility, then 197 even becomes the next 1 to 2 month target. That would not be an August contract achievement. It would be in October, I would suspect. But 197 even is long-term resistance that can contain buying into through the rest of the year, really. Now for the downside, if August winds up closing below 178 even, climbing daily actually, but it rounds out to 178 even as an average for the week. If we close below it, just the opposite. We should see this market unwind all the way down to about 171 even by August expiration. And that is long-term support for the broader live cattle market that may well absorb selling through the rest of the year. But right now, it looks bullish above 178 even, expecting 188.15. That's a big trouble spot overhead for the August contract. And that's pretty much all I got, Chip.
Excellent, Cary. Thank you so much for the update. Appreciate it. We'll talk to you again next week.
Thank you, sir. Take it easy.
You bet. Cary Artac, Artac Advisory. And just a reminder here, August cattle on just a short-term basis spiked resistance at the March 21 high of 185.05 today. Sat back and closed below that, but it's trying. It's knocking on the door. National Weather Service 6 to 10 day outlook has got below normal temperatures for North Dakota, the northern part of South Dakota, and most of Minnesota. Near normal temperatures, most of South Dakota, northern Iowa, southern Wisconsin, northern Illinois, and then above normal temperatures on a line below that. Above normal precipitation is in the forecast June 30 through July 4 for the entire Corn Belt. Highest odds for above normal precip in the northern production areas. Hey, thank you so much for listening today. Tomorrow morning, we've got Ernie Goss from Creighton University.